going to throw in one international player at the top, and that is Berkshire Hathaway. Because remember, it's the famous company of a famous man, Warren Buffett, one of the world's most beloved investors. But at the core of Berkshire Hathaway, apart from all the other things they own, is an insurance operation. Geico is the company that is one of the market leaders in short-term insurance in America. It's got the little lizard logo, or the gecko logo, I think is what it is. This is a company with a $318.56 billion market capitalization, so that puts it in the first division. Price-to-earnings ratio of 13, doesn't pay dividends. That's because of Warren Buffett's own peculiarities, but that means that it doesn't get included in the S&P, or it does, or the Dow. It's not in the Dow.
I think that's correct, yeah.
But, I mean, it's what exactly you mentioned. He has used the surpluses created by his insurance and reinsurance businesses to buy all these industrial holdings and to lever it along.
Absolutely, yeah. So, again, if you look at that free float, it's essentially can be considered very low cost or free funding to the extent that you're earning an underwriting surplus. You're basically being paid to hold that free float. Those premiums that haven't been paid out.
Okay, but we should just say in this conversation, we're not talking about life insurance companies, which typically make money from insuring people against death or, payouts in the event of death. Here we're talking about risk-related insurance linked to theft, automobile incidents, and business insurance. So people underestimate that. That's quite a big area of the total mix, right?
And also quite topical, obviously, drought insurance, crop insurance at the moment as well. Yeah. So I think the important thing is the risks are typically on an annual basis and are rolled annually. So you don't have this long tail of actuarial liabilities you have to work out and calculate and hold a lot more capital against.
Look, there are other big global insurers. Generali is a big player in Europe. There are various other players, in the reinsurance market as well. Let's look at Berkshire, though. We're not really talking about it as an investment prospect, but I guess it is worth asking the question. It's slipped. So it hits a high at the end of 2014. Why has it come down, would you say? And would you consider buying it at current levels in international portfolios?
Yeah, so it's quite a diversified portfolio now. So it really is an investment trust, I think, with a strong insurance element to it. You can consider a short-term insurance company as what you call a levered investment trust because of all those things that we've described. They earn premiums and they can use that to invest in the market essentially. So when markets do well, the shares tend to do a little bit better than the market. When markets struggle, as we're seeing at the moment, they can do a bit worse than the market as well. So I think that's really, it's a function of the market environment.
Warren won't live forever, Mr. Buffett. So there's also that consideration. He's in his mid to late 80s, I think, which is a bit of a concern. He's a great chap. He works well and he's fabulous reports every year. People like that. If he were to pass on, do you think the company would be split up, or do you think it'll just get new management and move onwards?
I think he's trying to do a lot of work to address the succession issue because it is, I think, the single biggest question overhanging the business at the moment. There is Ajit Jain. He heads up sort of their general insurance business. He's one of the potentials. He's considered a sort of an insurance genius and would be able to understand the insurance side of the business. There's, I think, Sokol as well, who's a good investor. So there are a few...
A couple of people that he's appointed just to run money in the sort of non-insurance portfolios, like Todd Coombs and so on as well.
So I think there is a possibility. I think they would probably see a successor. They would have to stamp their, their own sort of authority on it. I think if you saw the market derating it significantly post the Warren Buffett era, they would consider a breakup.
Okay. So hot or not?
I mean, market conditions, So, look, I think if you're not bullish on the market right now, I'd say not. It's, as I said before, it's at a sort of lowish premium to NAV, which has typically been a good time to buy in. So I'm a little bit lukewarm. I think if you're a Rand investor, it's an interesting opportunity now.
Okay, I'm going to go not hot. I think it's the other more interesting opportunities. Okay, I will give you a not hot. That sounded a bit wishy-washy.